Hello everybody and welcome to my third video of the day. Perfect match is this title. Celsius buys Alani new, and this is a match made in heaven in my opinion. If you follow Celsius stock, you know a lot of analysts, a lot of pundits were saying that Alani was causing Celsius stock to plunge, saying that Alani was taking a lot of market share. In fact, a survey where I can't recall the name of that survey, but I covered it on the channel before. A survey was ranking Alani as the fastest growing brand among Gen Z. Celsius was number 3 in that survey that was released about 2 months ago. I can't remember the name of it. Anyways, the point is those fears of competitions are now gone because Celsius is buying Alani. And in my view, this is a match made in heaven. I now can't think of a competitor for Celsius because all of the men-oriented drinks are not competitors for Celsius. Whoever buys a Monster, whoever buys a Red Bull is not trying to buy a Celsius or to buy an Alani. It's a different positioning in the market. And the market sees this. The stock market sees this because the stock is up almost 29% in after hours right now. That cheapness at $21 didn't last very long, unfortunately. Now, they agreed to pay $1.65 billion for the female-focused brand, and it's a brand that's really a good match because they focus on functional beverage. So what is a functional beverage? It's what I've covered in a video before on Celsius. It's vitamins in a can. Vitamins in a can. You don't have a multivitamin, you just have a can, and there's a bunch of vitamins in that, and caffeine for repeat sales, for repeat purchases, because when there's a lot of caffeine, people go back to it and buy more. And it's a great fit in my view because really the vitamins, the main source of making the cans, there's going to be a lot of synergies whether Celsius makes Celsius cans or Alani cans. It's going to be very similar. Also, Alani does powder packets, pre-workouts. This is also very similar to the earlier day businesses of Celsius with the Celsius powders that a lot of people mix in kits at gyms, etc. There's a lot of compelling aspects to the sale. They're expected to have more than $2 billion in sales thanks to Alani in a category that is itself growing 10%. So not only is the category growing, but they now have the 2 fastest growing brands in that category. They are going after a demographic that is fast growing, wellness focused women audience. So that's that. And again, Celsius is gender neutral. Alani is mostly drank by women, heavily promoted in social media. If you look it up, Kim Kardashian, the most followed influencer, for example, drinks it and had a partnership with them. So a lot of these Gen Z brands are heavily followed in social media. Of course, there's going to be a lot of operating leverage from merging these 2 brands together, from having synergies, and it's going to help the top line growth and the EPS growth. And of course, as you know on this channel, I'm mostly interested in the top line. This is definitely going to help the top line. Before I go over what the combined companies will look like, let me just say another reason why the market was happy today, I think, is because the Celsius sales at sell-through at the channels, right, which is the number you got to look, 2023, 2.21 billion, 2024, 2.7 billion. So the sell-through at the channel is going as planned, and the sales are going up as planned. And you could argue it didn't grow quite as much because Alani was taking some share. But if you look at the Pepsi overstock issue, this is what the sales really look like. So what you can see is that, yeah, in quarter 3, this is what made the stock drop, is the fact that Pepsi had overstock. But you can see Pepsi is going through its stock, and now quarter 4 sales are going back up. This is very reassuring. Same if you look at gross profit. If you look at gross profit, you can see in Q4 the profits are coming back up. In Q3 the profits were barely positive, so the market was really scared. But it was an inventory issue at the main distributor. It was a Pepsi inventory issue. The CEO kept repeating that on the call. The market just is so short term, they didn't believe it because they just look at the next 3 months or whatever. So this seems to have been a temporary issue. Another positive is the fact that while the sales internationally had been slightly down in Q3, they're now going back up. They had their largest sales internationally ever for the company. So the sales, the international story is playing out. The sales at the international level are going back up. These brands are promoted from social media. Social media is international. They'll be able to sell them internationally. And when I look at the company, like I said, the market really loves this quarter. I love this quarter too. It's a match made in heaven, and I don't even know where to start. But let's go over the valuation. So, of course, Alani was the only credible competitor. You go to the grocery store in here here in the US, you have Celsius, and nearby you have Alani. You go to the convenience store, you have Celsius, and nearby you have Alani. You go to the gym, you have Celsius mostly, and perhaps a can or two of Alani. This is how it works here. And you would think they would have to pay much more than they did for Alani. And I saw this on Twitter, some people wondering if they paid a lot or not. So 595 million in sales is what they seem to be doing for the trailing 12-month period, 595 million, and they've been growing at 50% CAGR, right? So what's the price then? The price would be 1.65 billion as the acquisition price divided by the sales. We're paying 2.77 times sales, or EBITDA, so their synergistic EBITDA from when they are fully combined, they're estimating will be 137 million of EBITDA. So they're paying 12 times EBITDA. They're paying 12 times EBITDA or 2.77 times sales for Alani. So they're paying a valuation pretty much in line with Celsius, if not cheaper, I could argue. And I would argue it's not that expensive because we're paying that for a business that is growing at 50% CAGR. So to me, this transaction will be highly accretive, especially because you're removing the main competitor from the market. You're removing your competitor. You're buying your competitor. And by the way, they don't need a male-focused energy drink. Male-focused energy drinks is like the whole segment, right? Monster, Red Bull, it's heavily saturated. They don't need to go after that. They're fine with the gender neutral and with the female-focused brands. And you can see they have slightly different designs, slightly different focus, but really not that different. The main difference is that Alani is almost exclusively for women, and Celsius is really gender neutral. I want to point out some of the things about Celsius is that not only is it gender neutral, but they don't mention that. But another thing is that Celsius is time of day neutral. You know, it's people don't associate it with the morning or the evening. So there is that. And don't forget too that any energy drink, whenever we discuss, we also have to think of it in the larger disruption of coffee, right? Red Bull, Monster, Celsius, Alani, sure, they're energy drink. It's a market on its own, but they're also disruptors of coffee. This is kind of like Visa and MasterCard not competing against each other. Visa and MasterCard compete together against cash. Well, that's another way to look at it. So, again, I find this quite interesting. I think this is a match made in heaven. The two brands go so well together. You can see the marketing. You can see everything. Anyways, valuation. Well, the valuation, I tried to recomputing it with my spreadsheet, but it's going to take a while, and it's going to look a little bit like a mess for a while. But let me just tell you a little bit. So Celsius trailing 12-month revenue was 1.35 billion. Alani was 600 million. Celsius going at 33%. Alani is going at 50%. So if you combine that, next 12 months, you could say that they will have 2.69 billion in revenue. So that would be a 38% growth. If you combine both growth rates, companies combined, they could be growing at 38%, rounded up to 40%, depending on how it goes. And the adjusted EBITDA margins are actually a little higher for Alani. I don't know if this is impression management for the acquisition or not, but assuming it's a 20% roughly margin for the two of them, you're looking now at a business when and I'm just going to ignore the debt because they are taking on some debt to acquire Alani, but I'm just going to ignore the debt and just use the $6 billion market cap right now. That means the business will be trading at 2.22 times forward sales or 11 times forward adjusted EBITDA. In my view, by no means expensive. And if I were to input these numbers, these combined numbers, which we will not get for a while, but if I were to input these combined numbers in my spreadsheet on EV over GP over RG, I would get something under 0.3, despite today's massive gain. And that would still be cheap. And today's massive gain, as of right now, is 28%. So as a Celsius shareholder who's been living a little bit through a valley of despair the past 6 months with Celsius, I could not be happier. We seem to be getting out of this valley of despair, and now, frankly, the stock, frankly, is worth. It should be worth more than that because now the competitor is gone. Like the main competitor is gone. So it's like the market should not be fearful right now. But anyways, this is not investment advice. This is obviously not financial advice. This is just my opinions, just sharing my journey here. This is only entertainment, not financial advice. Please like, please subscribe, follow me on Patreon, follow me on X, comment, like. Thank you for watching and have a wonderful, wonderful day.